How's everyone doing today? Shankar P right here. Today, like every day, we talk about the Bitcoin price and see where we're headed. Remember, I'm not a financial advisor, so all this information is just for entertainment purposes only. Without further ado, let's dive right into the charts. Alright guys, so let's look at this heat map here. We're looking at Bitcoin, Ethereum. Things are looking good today. You know, we had a rally in the market today. Good sign, but it was the bottom in. Has the bottom been reached? So a couple things that we could say is this structure, I do believe, looks similar. Where are we? This structure looks similar to this structure over here. Very similar, pretty much the exact same. If you ask me, it's very similar. So we could definitely be in a consolidation right now. So I don't think we're gonna be heading. I mean, and anything can happen, right? Anything can happen, especially since you know if the financial markets dip even lower. But we could just be ranging. We could just be ranging right now. Definitely a possibility. A lot of people over here, and I'll draw the same line right here. We had a lower low, then a higher low, and then they said the bottom was in. Obviously the bottom was not in. So we could actually just be consolidating in this area. We could actually just be consolidating in this area right now. And that would make sense as we are at the 19,000 support of the previous Bitcoin high. So we are at the previous Bitcoin high of 2017. So it would make sense for us to consolidate here, build some strength, and then start our ascension for the next leg of the bull market, of the beginning of the next bull market. So we could be actually in an accumulation zone. Definitely a possibility. Now the hash ribbon has flashed, and like I told you, the hash ribbon, normally when it flashes we drop, and we've dropped that 50% since the flash of the hash ribbon, about 48%. So this could very well be the bottom, and we could just be consolidating at this moment. So definitely a possibility. And I just want to bring this up because though same type of structure, lower low, higher low, does not necessarily mean we're just going to break off and have a crazy bull run. I've already showed indicators showing us that there's a very low possibility in my belief and in my analysis, not my belief, in the analysis that I've done, that we're not going to be heading to all-time highs anytime soon. At worst, we roll over, break this 19K. Now, if we break this 19K and actually break it and have a bearish retest, it could get ugly from there. It could definitely get ugly from there. A lot of people are calling for 12K. Many people are not anticipating just straight consolidation. Everyone wants Bitcoin to move, and consolidation could definitely be in the realm now. We could be at our accumulation phase for the next year and a half, or until the next halving, and then start our ascension slowly. And we could be in an upward accumulation. We could be accumulating like this, zigzagging up, right? Definitely a possibility. Let me get these zigzags out of the way. Okay, so we could be just zigzagging up, right? Definitely a possibility. So just keep that in mind, that this structure over here, very similar to this structure. So we could be accumulating, but doesn't mean we have to have a waterfall fall after. The hash ribbon has already flashed, so we don't necessarily, like, we were waiting for the hash ribbon to give us a buy signal now. And so normally when the hash ribbon flashes, that's the time to accumulate. So we have that at the moment. So I just want to take a look at the USDT dominance. So the USDT dominance, guys, we're very familiar on this channel, and we have here what you would see a blow off top. We have a blow off top here, and just like clockwork, as we have this blow off top, what happens? Altcoins, Bitcoin today, yesterday, started running a bit, and it's no coincidence that we have the USDT dominance blasting off. And I'll just show you the comparison again, just so you guys can keep it in your give you guys this. Look at that. Look at the correlation. Look at that. It's literally 100. Well, nothing's 100%, but it's very inversely correlated. Very inversely correlated. So if you see bullish setups on the USDT dominance, you maybe start looking for bearish setups for Bitcoin. Right now, where are we with the USDT dominance? We're currently getting close to testing, having a pullback and testing this. So we can look to see if there's any type of divergence or any other confluences that you can see to say, hey, you know what, we may bounce from here. Because if we bounce from here, chances are Bitcoin may retrace, right? It's literally very inversely correlated. You know, that's why I do like to bring this up. A lot of individuals do not bring this up. Unfortunately, they bring up the Bitcoin dominance, which is it's a great tool to use, but I do believe you need to also look at the USDT dominance of the flow of the money into crypto and out of crypto into stablecoin. All right. So what are we looking at now? We are looking at the S&P 500 now, guys. So what happened today? Let's look at it. So let me go on the 15-minute time frame. So we have right here on the 15-minute time frame S&P 500. So if you look at this trend line here, and how I drew this trend line is I drew this trend line touching this point, and this point, right? And so you can see that it got rejected here and then it closed right here. So that's how we drew the trend line. It doesn't look like a perfect, you know, a lot of individuals may draw it, I don't know, something like this. I really don't know how else you would draw this, to be honest. But when I draw my trend lines, I make sure that I let the price tell the story. I don't try to fit all the price action in. If it doesn't fit, then I'm not going to force it. My goal is to make sure that I can see the story best to my knowledge. You know, so this is like a roadmap. So we see we got the rejected here, and when we close, we push down a bit, and again we are at resistance. So let's look at the RSI and see what that's doing. So the RSI currently RSI looks all right. We do have a bit of a RSI looking all right. We did have a bearish divergence here, so I did see this in the trading day. We do have a bearish divergence on the RSI here. So we could be heading down, or it could have already played out in this, you know, lower high scenario right here. So we had a lower low, lower low here. So that could have played out, and then we made a higher high from this. So that divergence could have already played out. I was actually anticipating for it to go lower in the day because of that divergence. And once the retest of this, I was anticipating it to come all the way down here. Still a possibility, but remember, major reversal may happen at this zone. And we talked about this because if we go on the 4 hour, what hour are we on, guys? So if we go on the daily time frame, you can see here, let me just take this up, that this yellow, this is a daily resistance right here, daily resistance. We have a fake out here, and this trend line respected it here. And we have a daily resistance plus the trend line coming in right here, right? So that may indicate that, you know, if we also do have a divergence as well, a bearish divergence, was I indicated it could be a possibility that we actually roll over and make a newer low. So if that does occur, you know what I mean? I think we may have a sell-off. Could happen. Who knows? We may have a steeper sell-off than maybe people would be anticipating. But you know, a lot of stocks are down 80%, 90%. So you know, this could have been the correction, and we could actually be heading higher. So to be cognizant of that, there's a lot of stocks and that were up exponentially in 2021, beginning of 2021. And they're completely crushed right now. So, you know, a lot of people are still anticipating lower prices, and normally the market does the opposite of what we expect. But guys, let's just look at this, right? Let's look at this on a longer time frame. I'm taking off the log scale. Look at that exponential price, guys. Look how high that went. Look at that increase. You know, it wouldn't be a surprise if we came all the way down to this level here. I'll just put it in bold right here. It would not be a surprise to me if we came all the way down here or here. It would not be a surprise, because this is like a, you know, we've had the high, lower high, and the 200-day moving average. Holding it up for you guys so y'all can see. There we go. And we're underneath the 200-day moving average. So, like I said, stronger bearish momentum than bullish. Definitely could come up here, but the 200-day moving average is what we're looking at to overcome, to say we can head higher. But if we get rejected, I can see prices going to this low, at least to 3,377. So, you know, just be patient, be careful. This is your money. It's real money. And if you're new to the markets, I understand that, yeah, at the beginning it does feel like it's a game. And then it doesn't feel like a game. And then when you get better, it feels like a game again. So it's like when you go from being a baby, you're wearing a diapers, to when you're grown, you're wearing a suit and tie when you're going to work. And then when you're a grown old man, you might be wearing diapers again. So that's kind of like trading. When you're a beginner, you think it's a joke and it's a game, and you start gambling. When you're middle and you're figuring it out, you know, you have rules just like an expert, and you're figuring out, you may be a little bit more defensive. And then when you're an expert, you still have your rules, but your mindset is just completely different, and you think it's a game, but you know how to play the game. So just like life, man. So just wanted to bring this up to you guys. You know, when we retested bearishly on the 200-day moving average, it was just a lot of down pressure, you know. So you could buy now, if you want, you know, but just keep in mind the 200-day moving average. You know, if we get rejected, a lot of selling may happen after that. Because just like when we're in a bull market, the 200-day moving average is used. A lot of people buy on the 200-day moving average. In a bear market, people sell the pumps, and when it gets rejected. So it would not be a surprise. It would not be a surprise if we get a rejection off the 200-day moving average. This is a pretty steep correction. You know, but again, the market likes to fake people out. So who knows what could happen? Could have a V-shaped recovery and head even higher for one last blow off. But I don't think we're gonna be heading higher like how we did in 2020 and 2021 this year, or next year, you know. So with that being said, guys, I hope you enjoyed. Keep watching. Gonna be putting out content consistently for you guys, so you know what's going on in the market. Stay level-headed, enjoy your day, and remember, money will come once you build the skills. All right, take care.